Was your business fully or partially shut down during the pandemic? Did you notice a steep decline in your gross receipts? If so, you may be eligible for a refundable tax credit as part of the Employee Retention Credit Program, providing much-needed relief for thousands of small businesses and their owners. Keep watching to find out more. Who qualifies? Employers that were in business during 2020, including tax-exempt organizations, can get the credit if they either had to stop or slow down operations because of government orders related to COVID-19, or experienced a significant decline in gross receipts. A significant decline in gross receipts is defined as a decline of more than 50% in any quarter in 2020 as compared to the same quarter in 2019, or more than 20% in the first 3 quarters of 2021 as compared to the same quarter in 2019. Employers can claim up to $10,000 in wages per employee and receive a 50% credit for those wages in 2020. Employers can claim up to $10,000 in wages per employee per quarter and receive a 70% credit for those wages in 2021. The total maximum benefit is up to $26,000 per employee, $5,000 in 2020, and $7,000 per quarter in 2021 for quarters 1 through 3. Unfortunately, government employees don't qualify for this tax credit. The benefits. Small businesses have faced incredible uncertainty in the past few years, and the Employee Retention Credit benefits them in numerous ways. During the pandemic, it encouraged businesses to retain employees even if they couldn't operate at total capacity due to COVID-related restrictions. After the pandemic, it helped small business owners recuperate some of those lost but related expenses. All in all, the tax credit incentivized small business owners to keep their employees on the payroll instead of laying them off. This ultimately benefits those who remain employed. It helps businesses that prioritize learning how to retain employees too. For example, employee retention strategies often help small businesses as they help reduce the cost for employee turnover. For those employing hourly workers, this can easily reach well over $1,500. Likewise, the cost of employee turnover can go up to 150% of an employee's salary for technical positions. How to apply? Are you ready to apply for the ERC? You're in luck, as the deadline to get a refund for wages paid in 2020, all quarters, isn't until 2024. This means that if you're trying to claim the tax credit for all quarters in which you paid wages in 2020, the deadline is April 15th, 2024, if all of your original 941s were filed on time. If you're trying to claim the credit paid for wages in 2021, the deadline is April 15th, 2025. If your original 941s were filed late, you have 3 years from your tax filing date to claim the credit. Now, what are the steps for claiming the Employee Retention Credit? Business owners should work with a payroll professional to assist them in calculating the credits they are eligible for. There are many rules that must be considered when calculating the credit, including excluding most owners' wages, allocating wages to satisfy PPP forgiveness requirements, and ensuring that employers don't claim ERC for wages in excess of the maximums allowed. Once the calculations have been completed, you must prepare Form 941-X or the Adjusted Employer's Quarterly Federal Tax Return or Claim for Refund. Generally, you'll file a separate form for each calendar quarter in which you file the ERC. Valor Payroll Solutions. At Valor Payroll Solutions, we're dedicated to helping small businesses across the country. With over a decade of experience dealing with payroll taxes, we are experts in simplifying and navigating the complex legislation that small business owners often face. If you're looking for help with tax credits for the Employer Retention Credit, ensure you don't fall victim to pop-up ERC company scams. Instead, contact us today for tailored advice. And if you enjoyed this video, be sure to like, comment, and subscribe.